Moving forward with our project here, and it is interesting to mention that this is the third part, cycles in trading Ichimoku Kinko here, trending cycles, and under the trending cycles we are looking at the bullish cycle interpretation and strategy. So basically, if on the previous recordings in this part we made a distinction between a bullish or a bearish cycle, so that those would be the trending cycles and the transitory cycle. Now we're going to take a specific strategies to employ for bullish cycles and for bearish cycles. Now, a trending cycle shows the stance price is in, and it can be bullish or bearish. A bullish cycle is characterized by the following. The Tenkan line is above the Kinjun line, and they are both rising. So you are looking here for Tenkan line to be above the Kinjun line. This is the first condition to be met. This is a Euro-Dollar 4-hour chart, and we are looking to identify a bullish cycle. The Kinjun line is above the cloud. The Kinjun line here, the blue line, is above the cloud. So from this moment of time, the cloud is green, so the cloud needs to turn the color. The cloud turns the color only here at this moment of time. And the Chinko line is above the candles 26 period ago, and basically having no possible resistance in front of it, above the candles and above the cloud, I would say. So this is above the candles, but we should wait until Chinko is above the cloud, and this is 26 periods projected here. And 26 periods here, it is not a bullish cycle because the cloud below this candle here is still red. So the bullish cycle begins when the cloud turns green, and this is our bullish cycle that begins here. Now, all the time the bullish cycle begins here. Whenever the above conditions that are being met, it means price is trending to the upside. So buying dips should be the strategy to be adopted. Depending on the time frame, a bullish trending cycle is identified. The expiration date for binary options to be traded are different. There are two main strategies to be used in such a bullish trending cycle. Whenever price is finding itself above the Tenkan, so you are looking for price to be above the Tenkan, a trader should wait for a candle to close below the Tenkan line and touch it. So basically looking for a red candle that touches the Tenkan line. So we are looking for a red candle like this one here to touch the Tenkan line. The Tenkan line is the red one here. So a trader should wait for a candle to close below the Tenkan line and touch it, and the very next candle to be a green candle in this case that closes above the Tenkan. So from the moment you have the bullish cycle, let's try to look at the candles. So we are looking for a red candle to close below the Tenkan line here. It is not closing below the Tenkan. I mean, it's closing below the Tenkan, but the very next one, it should be a green one and close above the red line there above the Tenkan. It is not the case here. So we are looking basically for a one-with-one structure that goes from the upside there with a red candle, and the very next candle to be a green one that should close above the Tenkan. So not the case here for this strategy here. So we are looking for this one here, not our strategy here, because the candle needs to the red candle needs to close below the Tenkan. So keep moving, and there you go. This is our first pattern. See here. Let me try to make to take a shape and trying to show you exact the area. So this is our signal here. So what we have a red candle that closes below the Tenkan, and the very next candle closes above the Tenkan. That would be a moment of time when we should go long, or we should imply in buying calls. This sequence is a continuation pattern, and it should be treated as such, as normally price will continue moving higher after it. Buying calls is the only way to treat that, and the expiration date should be different depending on the time frame used. For this strategy, I would not look for smaller time frames than the 1 hour chart. This is a 4 hour chart, and based on that you can choose expiry times depending on your aggressivity. For example, what one should do when trying to buy calls, always take into consideration the time element from the moment the signal appears. So this is the signal that appears. You are looking for the time until the Tenkan line there, so 16 candles, and you have the expiration date 16 candles forward. So 16 candles, basically you are looking for price still to be higher. If you decide to buy I don't know, end of week binary options calls or something like that. But if you decide to go on the very short term, then exactly at the very moment that this candle closes, you might go for 1 hour or 2 hour expirations, and you go or even for extremely short-term expiration date. So here, as you can see, this is clearly a continuation pattern, and price is moving to the upside. Moving forward with the examples here, another example might be this one here, when we have the same. So we are still in the bullish cycle that begins here. So we are looking at the red candle that comes and closes below the Tenkan, and the green candle that follows, and there you go. This is a powerful continuation pattern to the upside, and this continuation pattern to the upside goes, let me put it like this, goes it 1, 2, so basically 2 4-hour candles to the upside, and then being followed by 20 candles out of 4 hours, so 80 hours of consolidation, well above our closing price here. So enough time to engage into buying calls on all the time frames, not all the time frames, sorry, on all the expiry dates possible, from the very short-term expiry dates like 60 seconds binary options, or 5 minutes expiry dates, or 1 hour, or a couple of hours, or even end of day with that kind of a result. So quite an interesting situation here. Now stay tuned for the next recording, where we have another strategy for bullish cycle, and how to trade this one.